How's it going, everyone? Welcome back to another 10-minute Thursday, or as I like to call it, TMT. Shout out Mayweather. But in today's video, I want to talk about ChargePoint stock.
Before I get into this video, please like and subscribe as it would make my day.
If you stay in a state like California in the US, there's a high chance you've seen a ChargePoint station. ChargePoint does EV charging, and that's all they do. But in terms of EV charging, they do it all. And what I mean by this is that they have a highly integrated system of charging for all types of vehicles, including cars, buses, delivery vehicles, and more. This fully integrated portfolio is certified for safety. Here's a quick fun fact. Did you know that someone plugs into a ChargePoint station every 2 seconds on average? Here are some more company statistics that should enlighten you on the vision they have. So they have 105 million chargers delivered and counting. 76% of Fortune 50 companies are ChargePoint customers. They also have a mobile app and home chargers that have top ratings, and they're continuing to grow their patent portfolio and have 20 plus awards for their innovative technology. So their solutions are designed and tested by people who drive electric, and their entire leadership team drives electric. This means they don't just talk the talk, but they also walk the walk. As you can see, they're also building a brighter future. 462,000 metric tons of greenhouse gas emissions have been avoided due to ChargePoint. They're also the first EV charging provider to be Energy Star certified for energy efficiency.
Day by day, we're seeing the electric vehicle revolution take over. We're seeing more Teslas on the road, more charging stations, and also more companies saying they're going to produce electric vehicles. Porsche already came out with their Taycan model, and we're also seeing Audi, BMW, Chevrolet saying they're all going to come out with electric models this year. And this is where ChargePoint stands to profit, as they have around 75% of market share. So now let's take a look at their financials. Revenue was $65 million, which is an increase of 79% from $36.4 million in the prior year's same quarter. Now, this has me pretty confused. For some reason, this presentation says 2022 fiscal year financial overview. Now, I don't know what kind of matrix I'm living in, but I'm pretty sure it's 2022 right now. So there's no way they can have earnings for 2022, right? That didn't make sense to me, so I'm just assuming that's a typo. Management, step up your game. You can also see that the revenue in Europe is increasing steadily, which is a good sign. The gross margin for the third quarter was 25%, up 20% in the prior year's same quarter results, and this is a good sign. Gross margin is basically your revenue minus your cost of goods sold. So the higher the gross margin a company, the better it is, as they can use this capital to pay off other expenses after. Their operating expenses was higher than revenue throughout 2020 and the first quarter of 2021. But if you look at Q2 of 2021, you can see that their revenue has exceeded their operating expenses. And this trend continued into Q3 of 2021. The company also has a market cap of $5 billion, so it's definitely still a growth company in its early stages. Not gonna lie, their income statement doesn't look the best. As you can see, they had a net loss of $69.4 million in Q3 of 2021 when compared to $40.8 million in Q3 of 2020. They had a lot of expense in terms of research and development and sales and marketing. So their balance sheet definitely looks better than their income statement, as their total assets highly exceeds their total liability. Also want to talk about another point when it comes to EV charging. For countries that are growing rapidly but still third world countries, like for India, for example, I come from India, where public transport, such as there's like a 3-wheeled public transport, and also buses are widely used by the common public. And I believe if ChargePoint plays their cards right over the long term, we could definitely see EV infrastructure in India for these public transport vehicles in other third world countries. So that's just another thought I have as to how they could expand their business, because these vehicles in India, at least, they pollute so much, cause so much noise pollution. There are also a lot of two-wheeler scooters in India, and India has started to electrify these two-wheeler scooters. So it just might be a matter of time before we see electrification of this public transport. but also that this stock would be an extremely long-term play in that sense. And this is just a thought I had. There's no fact or evidence behind it yet, but it's just something I thought as to how ChargePoint could expand their business into other countries. I also believe that all public transport will be first to go electric before all home-owned vehicles, and this is being seen in cities like London, multiple cities in the US. A lot of buses are going either hybrid or electric. This is also because it's hard to change a human's mind regarding what car they want to buy. Like someone might want a Porsche 911, and you're just not going to get that in an electric model. But when it comes to public transport, no one's going to care whether the bus you ride in is electric or diesel or petrol. I was also reading this article that said that if you were planning to buy one electric car, then the Tesla wall charger makes the most sense if you were to buy a Tesla, as it provides optimum charging. But the ChargePoint Home Flex, although it is a pricier option, it does work well when you want to charge any number of non-Tesla EVs. If you were to subscribe also to ChargePoint, you would get ChargePoint's wide network of public chargers, which is extremely helpful. Now let's quickly look at the institutional ownership. ChargePoint has a 49.78% institutional ownership. You can see 225 institutions increase their positions and 90 institutions decrease their positions. So some of the institutions that recently increase their positions or decrease their positions are shown here. Well, if the company is in green, that means they increase their positions, and if it's in red, that means they decrease their position. So as you can see, Lint Capital increased their position by 51 million shares, which is a substantial amount. But in terms of selling, you can see quite a few companies have sold out of all their position in this company. So you can see Bank Julius Baer & Co., MetLife Investments, but you can also see companies like Morgan Stanley, State Street, and Wells Fargo invested into ChargePoint. They're just holding their positions right now. I'll leave a link to this institutional ownership page down below if you want to check it out further. Now, let's look at the technicals of this company. As you can see, on 15th of February, the stock went from around 13.82 all the way up to 15.25 and had a pretty big rally just because the stock market rallied that day and the stock also saw decent volume. But on the 16th of February, which is today, we can see that the stock created a slight uptrend. It formed a lower high. One low was at 14.72 as shown here, and the next low was at 14.97 here. So on the daily chart, it is definitely in an uptrend, but it's also hit resistance twice at this point, which is around 15.5. So in the near term, I'd say definitely look for it to break above 15.5 for a bullish signal. But as of later today, it just stuck around the 20 and 50-day MA. So there's not really much price action here towards the end of the day. It did hit the 20-day MA at around 15.19 and bounced back up all the way to 15.4. But there's really no clear trend on the daily chart right now. We're still waiting to be seen. In terms of the RSI right now, you can see the RSI is around 55, which is also a healthy signal. So it doesn't really give us an indication as to which way the stock is going to move in the near future. So if you do want to get into the stock, don't get in right now because of the technicals, but get in because you want to be long on the stock and like their idea. Another topic I want to talk about today is shorting a stock. So shorting is usually done by experienced traders and experienced investment banks and hedge. So basically, these institutions are able to borrow shares and sell these shares to buyers in the market at this current stock price. And they believe that the stock price is going to go down. And once the stock price goes down, they'll buy back those shares they sold at a cheaper rate and then return it to the people they borrowed the shares from. But shorting is also a double-edged sword. And this is because if the stock price sees a rally in the price and a rally in buying volume, that would mean that these hedge funds have to buy those shares back at a higher price. And this in turn creates more buying volume, which leads to a higher growth in the stock price. That's what happened with AMC and GameStop last year. We saw those huge rallies because these hedge funds had to buy back at higher prices as those stocks were heavily shorted. So you can see that the current short volume of ChargePoint has increased to 31.8 million shares, and their short float percent of the float shares is 15.64. So we can see that if ChargePoint was to provide exceptional earnings or have a slight rally or really some really positive news and saw an uptrend, then we could say that there could be a possible short squeeze here because the company is shorted at 15.64% of the float. So let me know in the comments what you think of the EV revolution. Are you going to buy an electric vehicle yourself, or do you just believe this is all BS and petrol and diesel is the way to go? Well, that's it for today's video. Hopefully it was closer to 10 minutes this time around, but I'll see you guys in the next video.